tuned into Quick Charge, the high voltage podcast bringing you the top stories in electric vehicles and sustainable energy daily. And it's all powered by electric. Welcome to another episode of Quick Charge. I'm your host, Joe Boris. It's July 24th, 2024. This is going to be a Tesla-heavy episode today because, of course, they had their earnings call yesterday where they talked about finances, future products, Optimus batteries, all kinds of great stuff. And as the great Jerry Reed once said, we've got a long way to go and a short time to get there. So let's get right into it. Tesla releases Q2 2024 results. Billion-dollar revenue beat. This was published by Fred Lambert yesterday. Tesla released its financial results and shareholder letter for the second quarter of 2024 after the markets closed. As we reported in our Q1 earnings preview yesterday, the Wall Street consensus for the quarter was $24.3 billion in revenue and earnings of 61 cents per share. Just after the market closed today, Tesla released its financial results and confirmed that it missed expectations with earnings of just 52 cents per share non-GAAP, but beat revenue expectations with $25.5 billion during the last quarter. The billion-dollar revenue beat likely has to do with Tesla reporting $3 billion in revenue from its energy division, which Fred believes Wall Street has yet to adjust to after a record deployment last quarter. Quote, in Q2, we achieved record quarterly revenues despite difficult operating environment. The energy storage business continues to grow rapidly, setting a record in Q2 with 9.4 gigawatt hours of deployments, resulting in record revenues and gross profits for the overall segment. Tesla's stock was down as much as 5% in aftermarket trading following the release of the earnings. Now, one thing that we definitely wanted to hear more about during this earnings call was the 4680 battery, which, according to some reports, was in trouble and had been given a deadline by Musk to solve its issues by the end of the year or else be canceled. Well, the good news is Tesla released an encouraging update on the development of the 4680 battery cells, which you can see here being handled by the Optimus robot. In Q2, we produced 50% more 4680 cells than in Q1 and continue to see cost improvements. In July, we entered validation of vehicle testing for our first prototype Cybertruck produced with in-house dry cathode 4680 cells, a major cost reduction milestone once ramped. Cost reduction across our product line remains a top priority. Now, as Fred points out, 50% increase in volume quarter over quarter is impressive. But keep in mind the production was already limited as Tesla is currently only producing these cells for the Cybertruck, which itself is still in relatively low production. The bigger news here is that Tesla has started producing prototypes using the dry cathode, which should deliver the biggest cost reduction if it proves successful. Tesla's been guiding that 4680 costs would be below that of battery cell suppliers by the end of this year. That conversation about lowering battery costs, of course, means lower priced vehicles. Tesla has reiterated its plans to build cheaper electric vehicles, but don't expect the previously announced $25,000 electric car. CEO Elon Musk decided that Tesla needed to double down on AI and self-driving, primarily through its upcoming robotaxi dedicated self-driving vehicle. As we previously reported, Tesla canceled 2 vehicles based on its unboxed manufacturing process and now confirms that only the robotaxi is planned on the new platform. Instead, Tesla plans to bring 2 cheaper vehicles to market based on the Tesla Model 3 and Model Y, but the automaker made it clear not to expect the same previously mentioned cost reduction. In other words, it won't cost $25,000. Among all of the updates that Tesla fans were waiting for and eagerly anticipating, perhaps the biggest one was this Tesla Roadster. Elon Musk reiterates that the, quote, forever coming next Tesla next-gen Roadster will finally go into production in 2025. The CEO said that Tesla would unveil a much-needed updated version of its next-gen Tesla Roadster, which makes sense since the vehicle, which has yet to be released, is already more than 7 years old. He said that the vehicle would come to market in 2025. Now, in fairness, it was already on the market, which is why people spent $250,000 on it. This was 7 years ago, so it's been on the market for 7 years, just nobody's ever gotten one. Quote, with respect to the Roadster, we've completed most of the engineering. And I think there's still some upgrades we want to make to it, but we expect to be in production with Roadster next year. It will be something special. So this is the 7th year in a row that the Roadster will be in production next year. I'm really excited about it. I hope you are too. And Fred thinks that we might actually see it at Tesla's Robotaxi event in October, noting that the added time delay was supposed to enable Tesla to, quote, show other things. So we'll see what that turns out to be. If you think it's the Tesla Roadster, let us know in the comments. Now, as we've discussed the Tesla Roadster, I've sort of sarcastically intimated that I don't think it will be here next year. Another thing I don't think will be here next year is unsupervised full self-driving, though Elon disagrees. He says that he would be, quote, surprised if Tesla doesn't have unsupervised self-driving next year. Though even Fred says, like most of Musk's self-driving timelines, you should probably ignore it. I totally agree, though. Now, despite the fact that Elon seems to be fumbling the ball a little bit when it comes to fully robotized driving, Google's Alphabet is doubling down on robotaxis, committing another $5 billion into its competing company, Waymo. While some self-driving tech companies are dialing back their development or scrapping certain vehicles altogether, Waymo is pushing forward. Per recent media reports, Alphabet Inc., the parent company of Google and Waymo, has committed to invest a further $5 billion distributed over the next several years. The investment follows news earlier this month that Waymo was planning extensive expansions to its robotaxi service network, including a wider service map in San Francisco, Los Angeles, and adding Austin, Texas, where it intends to start transporting the public later this year. In a recent quarterly earnings call, Alphabet CFO Ruth Porat shared Google's intentions to support Waymo's quest to deliver world-leading self-driving technology. The parent company is developing and deploying more AI-centric tech across its business ventures, some of which are being researched alongside Waymo Taxi. So this link between AI, self-driving, robotaxi, and monetizing that in the stock market, obviously Elon's got it figured out. Tesla led the way. Google's following. Good to see that happen. When Google is showing steeled support for its Waymo brand, however, Cruise is reeling from GM's decision to nix the origin and stick with the smaller, less sexy lame duck Chevy Bolts. Now, lame duck there just means they're not building any more of them, as a means to keep its transportation company going forward. Cruise's former CEO, Kyle Vogt, who I met and shared a stage with at Electrify Expo last year, took to X to share his disappointment in GM's decision. Quote, disappointed to see GM kill the Origin would have been amazing for cities. GM repeatedly finds itself with a 5 or 10 year head start, then fumbles the ball, shuts things down, and loses the lead. Anyone remember the EV1? It's like someone keeps letting them look into a crystal ball, and then they go, nah, we're good. Now, I don't necessarily agree with that. I was very familiar with the EV1 the first time around, and it was quick and it was fun, but it's hard to suggest that that was a legitimate head start relying the way it did on Chevron's batteries, nickel hydride batteries. Now, there's plenty of people who disagree with me. I think it was a good lead, but I keep going back to this idea that in the late 90s, we still hadn't seen the real crossover boom. And the EV1, much like the Honda CRX or the original Honda Insight, it was a 2-passenger efficiency play. And the Nissan Leaf is an efficiency play. The Bolt is an efficiency play. And these vehicles don't sell well in America. Now, if GM had gone after the Chevy S10, made that an EV, they'd gone after something like the Blazer and made that an EV before anyone else had come out with that, that would have been a real head start that I think the market could have embraced. Maybe even a Corvette electric if nobody else had electric and GM had come out with an EV that could rocket down a 12 or 13-second quarter mile, which back then would have been a world beater. I may agree that they would have had a head start. I think Tesla made the right move here, coming out with a Roadster, coming out with a super sedan to go after the S600 and BMW Alpinas and things like that, and really establish themselves in that enthusiast space with that low volume production. That certainly proved to be the way. And now Tesla's valuation is worth more than the next 7 or 8 automakers combined. Tesla absolutely got this right. Elon absolutely got this right. I don't think the EV1 was the way to go. But hey, obviously, Kyle Vogt does. Waymo currently has 600 taxis in operation around Phoenix, Los Angeles, and San Francisco. With fresh funding in place and expansions to Austin already in motion, we expect to see those numbers grow in 2024 and beyond. Now, we just talked a little bit about some of the things GM is getting wrong. Here's another one. The 2024 Chevy Silverado EV lease price costs as much as two Rivian trucks. Now, this was an article that we posted a couple of weeks ago, written by Michelle Lewis, and highlighted how within a couple of dollars, the Chevy Silverado did in fact seem to cost as much as two Rivian R1Ts. Now, we've had an update to this. In just 3 weeks, Chevy reduced the lease price of the Silverado EV. The amount due at signing was cut by more than $1,500, meaning that the Silverado EV's effective monthly cost is now $1,554 per month. To compare, that puts it $24 per month less than two R1T adventure trucks. The Silverado is $555 per month more expensive to lease than a Hummer EV. Cars Direct reports that, as per the dealer leasing guide, the reason for the price cut is the Silverado's residual value increased by 6% to 61%, but GM Financial raised the lease rate from 7.2 to 8.5%. There are still no lease incentives or loyalty discounts on the Silverado. Now, while the Silverado may not be a great lease deal, it is still a great truck. There are, however, other great lease deals at GM, and one of them is Chevy's Equinox. Its EV just got more affordable lease and is actually now less expensive to lease than the gas-powered model, despite the fact that the EV is not only better, faster, smoother, quieter, but $12,500 more expensive. Again, according to online research firm Cars Direct, the Equinox EV 2LT can be leased for as little as $239 for 24 months, with $3,029 due at signing. The effective cost is $365 per month for the electric version. That deal is based on 10,000 miles a year and an MSRP of $43,295. On the other hand, the gas-powered counterpart is listed at $299 for 24 months, with $22.99 due at signing. The effective rate amounts to $395 a month, including a $1,000 lessee discount for non-GM owners. With that, the EV version is $30 per month less than the gas version, despite carrying a significantly higher price tag. Now, switching gears completely from mainstream vehicles like Teslas and SUVs and pickups, we're going to this. This cute little electric bike car may just be back from the dead. Now, Micah Toll covers a ton of great stuff. If you've ever seen his Alibaba weirdness, his vehicles that he brings in from China for his own farm, crazy, crazy stuff. And it's always super interesting. So if you're not familiar with Micah, definitely go to Electrek, check out Micah's stuff. So I'm going to read this here the way he writes it. Remember the Elf? It was one of the first ever electric bike cars to actually reach production. Nearly 1,000 of the hand-built three-wheeled vehicles were delivered between 2013 and 2019, when bankruptcy seemed to mark a regrettable end to the world's first production electric bike car. Despite its innovative design and hundreds of deliveries, the Elf ceased production in 2019, again when Organic Transit's bankruptcy forced a sale to the oil company Petrosun. The new owner allowed the vehicle to languish, never picked up the design or returning it to production. But this year, the vehicle's original designer, Rob Cotter, took back the rights from Petrosun and started a new company known as Environmental Transit Authority. According to Axios, Cotter is now in a seed raising round to get production back online and hopes to exceed the previous rate of Elk production at Organic Transit. He expects the retail price of the new Elf to be around $7,500, with higher end models costing $12,000. Now, if you're a road bike guy, if you're a tri person, you're used to spending $7,000 on a bike, and that doesn't even have a seat for the kids in the back. You can't really ride it in the rain, and you definitely can't park it like a car. Now, do you want to do those things? Does that kind of defeat the purpose of having a bike? Hard to know. But in a suburb like Oak Park or Evanston here around Chicago, where your 25-mile-an-hour speed limit and maybe the bike lane is not ideal, something like this would be a ton of fun. Think of it like an NEV or a GEM or any other kind of golf cart-like vehicle, but also gets you pedaling, gets your heart rate up, a little healthier for you, and I think a little bit more fun as well. Now, finally, we're going to close out today's extra dense episode with an energy story from Michelle. Starbucks is throwing its weight behind 6 new community solar farms in northern Illinois. Excited to see this. Obviously, a Chicago guy. This is going to directly benefit my life by supporting my energy grid and obviously the energy grid of millions of people. So we love to see it. If you've stuck with me to the end, thank you so much. I know this was a long one with a lot of text and not too many pretty pictures. We're going to get back to prettier stuff tomorrow and maybe a little bit of Mopar history. We'll see how that plays. So be sure to like and subscribe so you don't miss a thing.